It looks like we're hitting the 7 p.m. mark here. Before we begin, I'd like to thank everyone for coming and joining us here tonight as we discuss how exactly will RWA shape up 2024. So we have an amazing panel spaces lined up for everyone joining in. And before we begin, I'd like to introduce our panel guests for tonight, starting, of course, with CEO and co-founder of IXSwap and InvestaX, Julian Kwan. And joining us here tonight as well is Peter Gaffney, of Head of Research at Security Token Market, followed by Lomb of Kasu, Finance, core contributor, and Timo Lee, he's co-founder of Swarm Markets, and of course, we're still waiting for Alexandre Raffin. He should be here in a minute, but yeah, looks like most of everyone is here. While we're waiting for Alexandre, why don't we start with a little bit of an introduction from our guest panels here tonight. Let's start with you, Julian, and then we'll follow.
Thanks, Gene. Hi, everybody. We're going to get started for those that are here on time. Welcome to all the other speakers. We've certainly been interacting some of us for a couple of years here, so great to see you all here. My name is Julian Kwan. I'm co-founder CEO of IXSwap, which is built as a Uniswap for RWA. We also run sister platform InvestaX, which is also focused on RWA, tokenization, reward assets. Excited here today to hear what is going on all around the world and seeing the bullish narrative and progress of the industry happening on a daily basis. So thanks, Gene. Back to you.
All right, let's hear some introductions from you, Peter.
Hey, everybody. Thanks for having me on. Peter Gaffney, Head of Research at Secure Token Advisors, which is a consulting and advisory, the consulting and advisory arm of our company. So we'll actually work with different issuers and asset managers and even infrastructure providers on either how to get a security token offering to market, how to tokenize existing assets, or even just start looking at, how do we bridge blockchain tech into what we already have from like a brokerage or a transfer agent or a secondary trading perspective. And then we also track a lot of the secondary trading data from like IXSwap, for example, and other marketplaces around the world at Security Token Market, stm.co. So we'll kind of rely on both those insights in our research and kind of just, bridging the ecosystem as we see fit.
Nice, great introduction there, Peter. Thanks for that. Luke, why don't you give a little bit of an introduction for everyone here tonight?
Yeah, my pleasure. First of all, thank you for having me, Team IXSwap, Julian. It's a pleasure to be here. You could call me a core contributor. That's really the best thing for legal reasons right now when it comes to my role within Kasu. Kasu is an RWA bridge, not unlike Maple, Centrifuge, Goldfinch, others that are essentially taking DeFi liquidity, taking it off chain and bringing it into the real world. We're doing it a little differently in so much that we are partnered with a leading fintech software as a service provider based out of Australia that does invoice lending around the world, the US, UK, Australia and Canada primarily. They have around $2 billion of transactional volume under management and work with the world's leading accounting firms and their clients. And they're able to offer some really robust yields with levels of risk mitigation, unlike anything in market. So the whole thing that we're sort of pushing here is super risk optimized. And we like to say that we have the most risk optimized RWA yields in all of DeFi, but doing that with not just risk offset, but also decent yields in terms of the actual amounts, the APY, and then high liquidity as well. So lots of stuff going on. We can dive into a bit more detail later.
All right, thanks for that, Luke. And last but not least, I'd like to introduce Timo as well from Swarm Markets. Timo, if you could. Thank you.
Yeah, thanks. Thanks for having me, and I'm happy to be here again. And so Swarm Markets basically provides regulated liquidity solutions for RWAs. So we have a DEX on Swarm Markets, and we also have a decentralized OTC contract, which basically allows for peer-to-peer transactions. So you can basically decide like what level of compliance you want to see on the other side for a particular purchaser, and also like you could like narrow it down to individual buyers if you wanted to. So that's kind of what we do on the liquidity side. And then on the issuance side, we've done a retail prospectus across Europe for tokenized stocks and bonds. So basically publicly traded assets that we bring on chain through it basically goes through a brokerage and then issuance on chain. That's on Polygon today. And those assets are basically like perfect for uses in DeFi use cases. So collateral for any kind of stablecoin issuance, or just kind of lending against certain stable collateral that's largely uncorrelated with crypto in general. So I think that DeFi space is growing rapidly. I mean, it started obviously in Q4 22, and then last year I think it kind of broke through in terms of volume. And this year we're looking at bringing that, I think, to a more usable setting into retail, and just for people to be able to kind of hold their stocks and bonds and crypto in the same wallet, and then borrow against it if they want to. So yeah, that's it.
All right, thanks for the great introduction, Timo. Now, before we begin, gentlemen, I know there's a lot of topics we want to cover here, so we'd like for you guys to answer in the order of which you were introduced. And with that being said, everyone, we are finally opening this panel space. We'd like to thank you for joining. And there's been a lot of traction on RWAs in the past year. We can definitely see that in current news and evidenced by a lot of new players coming into the space. But as we go along further and as we begin 2024, I think it's a question that everyone's begging to ask is, how exactly will RWAs shape up 2024? And jumping into the first topic here, I'd like for the panels to just kind of give an idea or an insight into exploring how key attributes make RWAs crucial in modern finance. Probably we'll start with you, Julian.
Sure. So I think one of the most important and interesting points about the RWA narrative and industry and growth right now is that we came up with what? Sorry. Is that the difference right now with the RWA space and if I could split that into real world assets being non-securities and securities, the non-securities being tokenizing watches, for example, the securities being investing in an RWA that pays 10% interest like a debt piece or a financial instrument, is that we now have these real use cases for issuing securities in the blockchain. And the real difference now and over the last couple of years, because the RWA real world asset industry is basically renamed the previous name, which was security token offering, security token industry. So the crypto guys, the DeFi guys came in over the last 12 months and said, all right, there's no yields in DeFi. Let's tokenize treasuries and money market funds and come up with a place where there's actually yield, and we'll actually issue them as tokens. And to buy them, you've got to use crypto. And so for the benefit of all the DeFi, the crypto space sitting on stable coins and all other crypto that don't want to come out of crypto into fiat, will produce this really solid yield-bearing asset, and it all stays on blockchain. So I don't want to take up too much more time, but I think the point is that we've started to see now, at least crypto, the DeFi industry, has started to see a real use case. So security tokens, we've renamed them real-world asset tokens, but they're starting to see all different types of assets coming out. And a lot of them are those key financial instruments that are very, very valuable and important infrastructure traditionally in TradFi, like, these treasuries and money market funds. And I think there's just going to be this consistent growth of new products coming out. And I think what we'll see as well is we'll start to see a lot of these products kind of not replacing, but offering sort of a competitive position to a lot of the stable coins, which generally pay zero, are a huge part of the crypto universe. And now we're starting to see other optionality for investors, which is only going to grow, as well as getting the tokenized startups and the tokenized real estate and all that. But Gene, I'll pass it back to you so everyone else can share some thoughts.
Yeah, thanks for that, Julian. I guess I'd pass it over back to you, Peter, if there's anything you want to add to just what Julian said about how RWAs make everything crucial in modern finance.
Mm-hmm. Sure, and definitely want to echo Julian's point about stablecoin alternatives. We love looking at this in our research, especially like the cohort this year that really did it and put the industry more on the map than ever is the money markets and the treasuries, especially when Ondo came out, with their first real product last January. Can't believe it's been a year ago. And then that kind of stemmed a new cohort of 10 to 15 other treasury and money market type products. And it's just so simple. Yeah, asset managers understand the mechanics super well. Already a very super liquid subset in the capital market space, if you will, asset class. So the way I see it, it's like twofold. You have something pretty simple and proven to work with to get your teams up to speed on tokenization and on blockchain tech as a whole. And then you could also start rotating people out of non-yield generating stablecoins into professionally managed products or vehicles that are backed by professionally managed products to kind of make this happen. So that's been an interesting theme. And I think the real tough part is about finding the demand side. And I know a lot of DAOs and Web3 firms and even protocol treasuries are diversifying into these on-chain treasury products or money market funds, which is amazing. I think the real holy grail that a lot of our clients at least are after, though, is how can we plug in and get like professional, let's say wealth managers, financial advisors, different RIAs, family offices. How can we kind of get their capital on chain? And that's a whole different question, in my opinion, from what we've been hearing. But I think there's, two sides to the coin as always, the more retail driven, which is perfect for the protocols we're talking about here. And then also, working into the legacy systems to really bridge the gap between off-chain fintech solutions and then now these on-chain products.
All right, thanks for that, Peter. Is there anything you'd like to add to that, Luke?
A couple of great points being made here already. I'll probably just say one thing, and I think Julian kind of nailed it earlier, that RWA is not a new thing. This has been around a while under different names, digital assets, digital securities, security tokens. And I mean, I recall back in 2018, after we had that big run up with Bitcoin at the end of 2017 and 18 was the start of that sort of prolonged bear through 2019 and then 2020 when things sort of picked up again. But during that bear market, there was this really interesting uptick in the interest of security tokens. It was like the next big thing. Everyone was into it. Everyone was excited about it. And, I had a consultancy at that stage where I was working with a bunch of different players in the space, from Securitize and Open Harbor and so on and so forth, and talking with different clients that were interested in, doing some kind of security token launch. What I realized pretty quickly, and I think what Julian has been through himself as well, is that it just wasn't the right time in the market. There's this thing called the Gartner hype curve, which I'm sure plenty of you already know about it. And it applies to pretty much any new technology or innovation. It follows the same kind of trend. And you see this, and I've got my hand in the air, but you can't see it, but you see this sort of massive run up, like this big steep sort of Burj Khalifa on one side, as everyone just gets so excited about this new technology, this new solution that's going to change everything and be the big paradigm shift. And RWAs went through that like back in sort of 2018. Like it had that huge big run up, and then you get that, it's called the peak of expectation, which I like to call the peak of stupidity, where everyone realizes after all the VC money and everything's flown into it, they realize, well, we don't have product market fit yet. And largely that was a result of the regulatory space. There was just so much lack of certainty, lack of clarity in terms of what people could and couldn't do in the digital asset space and with blockchain. And I think certainly MICA in Europe and other regions where we're starting to see frameworks in place that are making things a little clearer. Anyway, coming back down out of that peak, you see this trough of disillusionment where security tokens were just not interesting for anyone for quite a while there. Even through the last bull market, it was like NFTs were the big thing, and NFTs are going to take over security tokens, and everyone kind of forgot that, well, there's still regulatory issues we need to deal with here. And now it's like, this is kind of the summer of RWA. At least that's what everyone sort of leads you to believe. And I think that it's not like it's just popped up. This is something that's been building for a while. And it's a factor of people that have been in the space for a long time, like Julian, InvestaX, prior with IXSwap, playing in the space for many years and getting all the licensing and doing all the things that he's been doing there, playing that long game, and letting the market finally catch up to him, and the market's finally catching up to those people, ourselves included, where we've sort of had this vision. We knew the role that we wanted to play. We just need to make sure that the market factors were sort of favorable for us. So I think it's an exciting time. And I think that, we have certainly the regulatory space, which is clearing up. We also have sort of the validity of blockchain in general. The ETFs, have been a big boon there, even though Bitcoin's sort of gone backwards. But get out of that short-term thinking and look at what this means on sort of the macro scale. And it really does bode really well for the whole sector. And I think RWA, security tokens, digitizing, fractionalizing, bringing everything on chain, it's just the way it's got to be. It just makes such perfect sense. And I'm looking forward to seeing how this evolves.
All right, thanks for that, Luke. Yeah, and I couldn't agree more that RWAs have never been in a better place than they are now in 2024. And lastly, I'll pass it over to you, Timo, if there's anything you'd like to add or comment.
Yeah, I think, well, also having been kind of in this space since 2018, I guess, it's been a lot about like removing friction over the course of the years. And it's been like different aspects. Like in the beginning, it was very much about when we were talking to issuers about like how to tokenize a fund, for example, and issue security tokens, was a lot of the conversation was about structuring, like how do we set it up, what's the SPV, where does that happen, where does it trade, and so very kind of fundamental questions. And I think by and large we have kind of been able to solve that. And then of course on the secondary liquidity side, there was like T0 and Open Finance, and they weren't really trading anything. So it's just like that didn't really exist either. And then, of course, on the investor side, although many of the issuers were hoping that like, crypto people would just show up with like free money and then buy their tokens. And that obviously didn't happen. So I think on the investor side, maybe that's the biggest shift now going into 24, when there's actually like a mass education of people happening around crypto in general, driven by the ETFs and so forth. And then, of course, the regulatory setup for where both, where you do primary issuance as well as where do you trade these things. I mean, that's by and large being solved as well now, or has been solved, I would argue. So I think like removing friction is the big thing. And I think like we're kind of seeing the last pieces of the friction being really removed, where, some of those aspects are soft ones, like, what does it mean to buy and hold a digital asset? Is that, a trustworthy setup? And where do I buy it? And how do I buy it? And all those things that I think have caused a lot of mass market friction in the past. But I think that's where the whole like ETF wave is helping a lot in terms of that education and just trying to get people to understand blockchain in general. And then obviously, Bitcoin is obviously not the same thing as what we're talking about here with RWAs, but it does help in the overall educational effort, and it helps to kind of create trust around blockchain as a technology. And in the end, I mean, we are building the internet of value. That's kind of why we're doing this. And there's like all these different compartments within that. And I think the RWA space is getting ready to really scale. And yeah, I mean, I agree with all the stuff around obviously stable coins paying 0%. So there's a lot of opportunity in developing new products that don't exist in TradFi, including yield bearing products that have streaming payments, but that are not necessarily natively crypto, but that are linked to RWAs, so that we can get like a really good user experience where with continuous payouts of underlying assets that make sense to people, and it just becomes like a better product when it's on chain.
All right, thanks for that, Timo. It looks like Alexandre Raffin, of CEO of Gains Associates, has finally joined us here tonight. Alex, I just asked the first question here. Maybe you'd like to share your thoughts as well. Right now, we're discussing what attributes, or actually what key attributes actually make RWAs crucial in modern finance. Perhaps you'd like to share some thoughts around that before I jump into the next topic.
Hello, guys. Thank you for having me. Sorry, I'm a bit late. Yeah, absolutely. So, when I think from first principles, and not even first principles, just with traditional finance, RWAs are inevitable in my opinion, and they already exist for basically everything, right? I mean, if you want to invest in gold, you're not going to buy gold and store it at your place. Very, very few people do that. And so I think for a wide majority of assets, RWAs are just going to happen without people knowing they are here. I don't really understand. I mean, there's many issues with legal and technology to make RWAs really happen, but I truly think they're inevitable just from a global standpoint. So I guess that'd be my take. Because they already exist, right? And there's actually not many things we invent in crypto. Same thing with DeFi. I mean, most of DeFi is TradFi on chain with a few details. But yeah, so I don't think they're such an innovation, and yeah, I think it's gonna be pretty cool and enable many value creation opportunities and just facilitate commerce on a global scale.
All right, thanks for that, Alexander. Yeah, and I'd like to highlight. I mean, it's aligned with the second question that I'd like to ask here. I think a lot of people still don't understand that the gap between TradFi and DeFi is definitely something that RWA will help across. So I guess the next question I'd like to ask you guys, and I'll start with you, Julian, is maybe you could perhaps specify how exactly RWAs will be the bridge between traditional assets and with this new digital financial landscape.
Hey, Gene. I guess you want us to roll the same kind of way. Yeah, look, I think there's lots of different, areas and opportunities. Real world assets, at least let's focus on securities and equities and debt. It's going to come in so many different industries. And then you have the straight and narrow kind of shares in a company or shares in a fund. And then you have all the kind of financial instruments, from simple things like treasuries to more complex instruments like structured products. One of the key differences for this new, and again, like first STOs were failed ICOs in 2017-18. So here we are in just turned 2024. We're now talking about RWA. But one of the key differences is that it's predominantly all on chain. I say predominantly because a bunch of the banks are doing their own private blockchain stuff, which kind of defeats the purpose of using blockchain. So forget the banks for a minute, and this is why the startups are going to win the RWA space, not the banks. The real RWA are actually whatever the assets are, but they're issued on chain. And that's one of the key differences. Before, when we were talking about STOs, it was people tokenizing pieces of paper, because up until recently, pretty much every country in the world issued a company or a fund as a piece of paper. So the challenges were many, but one of them was a lot of people were blowing smoke and mirrors, and they weren't really issuing a token. They were saying they were issuing an STO, or they'd issue it if they were raised money, but it wasn't necessary. It was a nice to have. And because it wasn't necessary, all the guys issuing generally went back to issuing paper, and all the infrastructure from exchanges and trading and liquidity and all this stuff wasn't there, although it was hyped up to be kind of the end game. And so now I think from a perspective of what's the value proposition, it's many. It's adding to the already world of DeFi Finance 2.0 on chain. Let's bring all our other real world assets on chain. And then it's also the beauty of crypto DeFi space is that if you think about it, the STO space was crippled and restrained by the nature of TradFi, right? Wanting to hold on, do things the same way. Well, the whole of TradFi is built for rent-seeking middlemen. That's the whole existence of Wall Street. So the actual concept of RWAs in their purest form actually eats into the original business model. So the difference right now also from the issuer perspective is you actually have much better quality RWAs than STOs. And you also have much better quality because you've got the issuers, the people who are issuing these assets. Ironically, again, there's so many twists and turns of the story. They're not random people launching meme coins and NFTs that just want to pump and don't need any particular background in that asset, in brackets. If you're going to go launch a tokenized treasury bill, you've probably been working in treasuries for 10 years. Otherwise, you don't even know how to do it. So the actual issuers are much more sophisticated. They're only issuing on blockchain. If you don't issue on blockchain, if you don't issue the RWA token, there is no product. Whereas in the STO world, you could just still buy the paper share of the real estate fund. So we've got this amazing situation now where the crypto guys have brought the STO RWA space to the marketplace. And at the same time, another twist of the turn is that because the whole kind of bullshit that crypto is going to save everyone, it's cheaper than everyone, you've got stable coins, which are worse than bank deposits, right? You can get 10 basis points in a bank deposit, but if you hold stable coins, you get a big fat zero. They've actually kind of allowed now the birth of these new assets because there's real use case. So there's a million things to unpack, but there's a few ideas for people to think about. Thanks, Gene.
Julian, I think that you kind of nailed it with the whole rent-seeking middleman business. And I mean, I tend to try to stay out of the weeds particularly in a format like this, and bring it back to the why, and that top level why. Why are we here? What are we doing this for? And ultimately, there is this libertarian, let's, break down these incumbent systems, but that's where RWA is really going to make some meaningful strides in terms of, you look at the traditional finance institutions, the banks, the lenders out there that have a stranglehold on how capital is deployed. Yes, there are middlemen, there are high fees, there's slow speed to market, there's overregulation, there's accessibility issues. There are so many reasons that make them just a pain in the ass to work with and deal with. Whether you're a little person that wants to get a mortgage on a home, or whether you're a business that wants to fund, or whether you're anyone for that matter that's looking to access capital in new and interesting ways. And we often frame these kind of conversations from the crypto perspective, because this is the game that we play. This is the world in which we operate. But let's not forget the value that we are bringing to the traditional finance sector. Maybe not the players that we're looking to disrupt, but the people on the other side. Like, for example, with what we're doing with Kasu, right? One of the very premises for us to establish Kasu, like, we're not, you look at, there's incumbents already, there's like your Goldfinches and Centrifuge, and there's these really top quality projects and platforms doing great work, and we respect them and think they're doing awesome stuff. We're not, we wouldn't have gone out to do this unless we saw a real need. And that need was through this tech partner. We had our first pool delegate, which was Apsium, and they have this huge opportunity to do all of this lending and financing. But the game that they play is technically unsecured, which means their access to capital is looked at through a lens of, you're paying LIBOR plus 5, 6, 7, 8% even. Plus there's these fees and directors guarantors and all of these onerous requirements that the traditional lenders will impose upon them in order for them to access the capital they need to really scale and grow the business. And it's not until they start borrowing significant sums, 20, 30, $50 million, that they go to the investment banks and they can sort of bypass that, and they get much more reasonable rates and less predatory. And so it's like, we can access a world of, DeFi lenders out there, a world of stablecoin holders that want to earn a decent yield, that don't want to be exposed to the Ponzi-nomics of, DeFi Summer 1.0, where we had all of these yield farms popping up with unsustainable mechanisms in place that, offering high yields that, didn't really work. They want access to real businesses, real cash flows, real opportunities, sustainable, proven balance sheets, and so on. And I think that this is why it works. It's such an amazing two-way street here. There's value flowing into crypto. There's the opportunity where people can actually really benefit from those real world businesses, and vice versa. These businesses get to bypass those incumbent systems and anarchic, setups, and access capital in much more reasonable ways. So I think it's exciting what's going on here, and we're just seeing the start of what I think is going to be a really blossoming time over the next 12 to 24 months.
All right, thanks for that, Luke. Yeah, I guess Timo, Peter, Alexandre, any of you want to add your insights to that?
Well,
Sure. Couple great points going on here. Sorry about that. Couple great points here. I think the original question was, really how does RWAs bridge the gap between, let's say, crypto and TradFi a bit more? I think it really just comes down to getting everything into a digital interface, like a standardized digital interface. Like, crypto was never meant to replace real estate, never meant to replace private equity, right? We have private company shares. A lot of the startups on the call here as good examples. It's more about putting all these different asset classes and types into a more standardized and interoperable system. And that's what I think is very, very interesting to a lot of like retail type issuers and even just bigger blue chip firms alike as they look at tokenization and real world assets, whether that is working with like a Centrifuge or a Maple on individual financing, or working towards, issuing compliant 1940 Act funds on chain eventually. And I think Julian mentioned the point about all the middlemen, the rent seekers. Eventually getting all these products into the same system is going to help with those efficiencies that everyone, myself included, loves to tout about blockchain-based products and securities. And that's really where it's headed. And then once you have all these different asset classes on chain, you really see the power of just portfolio construction, rebalancing, reallocating in super small and precise fragments if need be, which I think is a cohort that leaves a lot of money on the table right now. For even for smaller pockets when you're dealing with bigger sized investment checks. And that's also to draw on the points before why I think treasuries and money markets was a great initial product, because while portfolio managers are in the middle of different alternative products, maybe they have new targets in mind or they're about to rebalance. What are you going to do? Are you going to sell all that into cash and fiat and wait until an opportunity opens up? Or are you going to just rotate into a treasury, generate yield on chain, and then when your next opportunity comes, whether it's a PE fund, a VC fund, or something else on chain, you can just automatically rebalance into that. And I think that's the most efficient portfolio management mechanism we'll see so far. And that's just kind of my 2 cents on that field.
All
I have
right. Thanks.
I
Yeah.
I have
Go ahead,
a couple of
Timo.
points there. I think I mean, the way I look at it is like, I think digital innovation really, is about making products that are like not like, a little bit better, but like are significantly better. And, in many cases, like impossible to implement in TradFi. So I think that's what it's all about. And it's not only about like an incremental improvement. It's really about like creating things that, didn't exist before. And so, and, at its very core, if you look at like stocks, for example, I mean, it's like 24/7 trading, instant settlement. Even that is not possible in TradFi, and it's a leap forward. So I think that's like a very basic place to start. And then, if you can create services where you can borrow against any asset or portfolio, that's also not possible today, especially not for retail. Maybe for some family offices, but not for retail. So I think that's like those are the things that we need to create that basically, are not like offered today. And so instead of like throwing assets over the fence to some rent-seeking unit and then hoping that they will deliver on something, the key mission here is really to create like products where there's discretionary control for the investor, and then also like continuous I think continuous yield payments or like streaming payments is a really important feature in this regard, because like transaction costs are so low on blockchain in many cases that you can actually build trust by just like delivering value to people, like I mean tangible value in terms of like cash or monetary value on a continuous basis, which then over time builds a lot of trust. So even if it's like innovative products, with a challenge that they're not like proven or trustworthy yet, I think the way you do that is by just making sure that people can get their money in and out anytime and get continuously paid, rather than just being like paid at some interval that is not necessarily in their best interests. I think those are the kind of aspects that I would be looking for as an investor, where a lot of TradFi, being it public or private market, is just like super clunky and convoluted. And so that's a huge opportunity for us.
Thanks for that, Timo. Yeah, Alexandre, go ahead. Share your thoughts with us, please.
Hey guys, Alex from Gains. Yeah, I mean, very quickly to add something concrete, here in Dubai, Damak, which is one of the main real estate producers, they did about $1 billion in revenue last year. They accept crypto on their website. And well, payments are one thing, but I think there's just one step between payments and having your asset on chain. So that's a very good sign that things are moving forward. I think the opportunity for companies is actually decently small at the beginning. I don't think it's going to represent more than a few percent of their revenue, in crypto and with real world assets, tokenized and so on. But I think it's also for them a way to position themselves as being really top notch when it comes to doing the latest thing, right? I mean, there's a reason why Tesla was also dabbling in crypto. So I think it also appeals to kind of people who stay up to date with the latest technology. And I think it's pretty good positioning marketing wise, at first at least, before it gets real traction and brings in real revenue for these companies. But we're definitely, going in the right direction.
All right, thanks for that, guys. Now that we've kind of more or less defined RWA's role in this new digital landscape, I guess I'd like for us to do is kind of how do we bring down this to the level to your everyday retail investor? Like, how do we highlight the advantages of adding RWAs into the digital ecosystem. As more so for 2024, as we see more crypto investors jump over into the RWA narrative. Yeah, I guess I'd like to get your thoughts, Julian, and then we'll take it from there.
Yeah, again, so many different kind of ways this could go. Look, I think to the two levels, for the retail investors, what's interesting right now is that a lot of people are pumping utility tokens from RWA platforms, but the super majority of RWA platforms are only available for accredited investors and institutional investors. Why is that? The recent push of assets have been financial instruments. They've been put into the market as a need to solve a problem, i.e. there was no yield, and what does a couple of $100 billion of stablecoins do? When it's making no money, it's hunting for yields, but to stay in crypto, we needed some kind of tokenized returning mechanism, which became these treasuries because they were paying such high interest rates. But then, so the guys that launched them were like, you need licenses to handle retail investors, and most of them didn't want them, hadn't got them yet, don't plan on ever getting them, and accredited investors. And this has a few different layers to it, but I just try to simplify it today. It's easier to just onboard these guys. They're going to write bigger checks. They don't want to deal with people with $1. Now, that's one side. The other side is retail. I can speak on IXSwap's behalf. And the IXSwap was built so crypto investors, meaning everyone, not the rich, the high net worth, the accredited, could buy real world assets, STOs, as easy as buying crypto. And to get to that delivery, to deliver that promise, I should say, we had to go and get our own crypto license, securities license for retail investors. So we're happy that, and I think one of the very few globally, that allows people to come onto the platform and buy a share of a startup for one USDT, USDC, one IXS, whatever the asset's priced in. So, the real excitement, I think, from, to call it the retail investor, from the everyday crypto person, is the use case for RWA is many, right? Financial instruments, private equity funds, startups, tokenized carbon credits, whatever it is, securities or not. It's actually being able to access all these assets that, again, were typically for wealthy investors only with bigger checks. And most of the structures for that wasn't necessarily because the issuer, the fund manager, whoever, didn't want lots of investors. Everyone wants lots of investors, but it was really the paperwork and the cost of actually distributing. So when we started off many years ago, we were one of the first real estate kind of crowdfunding platforms trying to kind of really attack the concept that raising money and investing in buildings is only for big guys, and what about everyone else who wants to invest, and what's the point of the internet? Shouldn't we be able to do this cheaper? The first generation of online investment platforms, crowdfunding, P2P lending, etc., predominantly one of the biggest issues was that when you peeled off the websites, it was paperwork still, and people didn't want to take smaller investors. So it was still $50,000, $100,000 minimum investments sort of globally for this. And then the difference right now with RWA is that you can technically, and you can legally, issue $1 million $1 tokens to people and have 1 million people on your cap table. There are structures available for that. So it's a whole new world of assets. I think it's a great use case for crypto. I always said STOs, now RWAs, would help crypto a lot, and now we're proving this. And the irony is the crypto guys started buying real world assets that were actually treasuries, US treasuries, which they're staying in crypto because they don't want to be in fiat. But however we got there, we welcome them. And I think it's just ultimately a whole bunch of new use cases. And then, key being, that's been mentioned by the other guys here as well, on-chain, right? It's transparent, it's on-chain, these smart contracts, immutable transactions. Essentially over time, it'll be proven that, all of these, it'll be less risky than investing in traditional assets on paper. And that'll just take a bit more time to play out. Thanks, Gene.
You nailed it again, Jules. And I think that the key here is accessibility, like the ability for just everyday punters to access a whole world of opportunity that they previously didn't have that exposure to. Is quite phenomenal. Like if you think about those walled gardens where you had to be, only institutions would get access to certain asset classes, or I can't afford to buy fine art that's worth millions of dollars, but hey, I can buy a piece of one, or a piece of a nice car, or a piece of a Bored Ape. I mean, Jules, you guys, didn't you fractionalize a Bored Ape not long ago, if I recall correctly?
Yeah, we did. So yeah, people can. It's still around now, and put it into $1 shares, so you could buy a part of a Bored Ape, and that was actually when Bored Apes were about $220,000 equivalent in ETH. So you could buy a $1 share, and we actually still have that now on the platform. And we actually created one of the first liquidity pools for this asset. It's an STO, it's an RWA, and there's liquidity for it. So not only could you buy into this asset for $1, you could actually trade it, and then there's actually liquidity for it. There's like 3 or 4 things in that, which to I think was it Timo's point, whatever. This is not 0 to 0.1. It's not like 0 to 1. It's like 0 to 5 in terms of the benefit, the better that versus buying one share of something.
Absolutely. I mean, you name the asset class, like any asset class, from a Bored Ape, fine art, cars, commodities, commercial real estate, whatever you think, and you think about all those people out there that never had a chance to access those asset classes because they were never going to have the funds to come up with the whole one. Like, I can't buy a whole ape or a whole piece of art or a whole commercial building, and the ability to access that now is, well, now I should say, is, yes, now, but certainly what's coming down the line here, I think as everything ends up becoming tokenized, and I think that everything kind of will be tokenized, it just opens up such a broad array of opportunity and possibility, and the liquidity as well. Think about all of the value that is just stored and doing nothing, that now becomes liquid, now becomes transferable on chain, immutably, easily, quickly, and with AMMs like IXSwap. I think it's a phenomenal opportunity, and it's a crazy time we're living in, that we're on the cusp and sort of seeing this play out. Like, I think certainly in the space of since when Satoshi came up with that idea in 2008, 2009, where we are now, in the course of the next 10 years, there's going to be a paradigm shift in the way we approach so many sectors, and I think that blockchain is going to be powering that, and that's why we're all here. I think we're all believers, but I think the RWA aspect of that is going to be something truly profound, and that's where a really valid use case is going to shine. It's exciting.
Any thoughts around that, Peter?
Nothing new. I think everyone's hitting it on the spot. It's really a matter of getting, just showing existing retail investors that you can bridge kind of any type of asset compliantly and affordably, if you will, for their own specific portfolio makeups. It's just, tons of more bringing quality use cases to the market to really show them what's going on. It's been said a few times here that, this space has been around for, let's call it 6 years now. And there's been a lot of ups and downs and some flops in certain asset classes. So if we can really show viable projects that have raised capital successfully or that have some decent liquidity on certain secondary marketplaces, I think that'll go a very long way. But that's kind of what we're working towards.
All right. Yeah, Timo, please, if you could share.
Yeah, I think, well, I mean, one way to look at this is like, how do we get like people from being salary junkies to becoming like sovereign individuals that can actually control, their life in a good way and create some optionality for themselves. I think that's like one of the, missions behind what we're doing here. And then, of course, on the friction side of that is it's the regulatory part, right? So I think, when we did the prospectus for the retail prospectus for public stocks and bond ETFs, that took 9 months, and it's obviously, I don't know how many pages. It's a lot of pages. But once we got that out, like now it takes us 2 or 3 or 4 days to issue a stock or bond ETF on chain. And I think that's like a step change because it brings these other benefits that I mentioned with 24/7 trading and borrowing against that portfolio and so forth. So I think that's like very core fundamental pieces and building blocks that we're putting in place. But then on top of that, it's like actually to kind of allowing for that creativity and for people to create their own kind of product mixes and create a life that works for themselves and not be like confined into a path that and I think this is like regardless of almost where you live, right? Because it's just at different levels, and if the transaction cost is low enough that you can buy anything from $1 upwards, well, then it's available for anyone. So I think, yeah, that's kind of my view.
Yep, Alexandre, I see you got your hand up there. Please feel free.
Hey guys, Alex from Gains. I mean, these were very good. I would share an experience that I had yesterday. I own a few pudgy penguins, and again, it's slightly different. It's licensing, but still, I'm not exactly sure if there was someone who did it first, but it was extremely well done. There was an on-chain contract, and it was like all the SAFs some of us have seen many times, and the parties were, well, the Igloo company, one of the companies behind the penguins, and then the on-chain address holding the NFT. And so it was really amazing to see a contract with one of the parties being an on-chain address, right? It was really labeled NFT holder of the Pudging Penguin number, 1234, and then the address on chain. And so I think we're really starting to see the technology come up and facilitate these things. Now we, in this case, still had to sign and connect to wallets, but I think it's going to be smoother. And well, it's kind of tied to assets in a way, because then there's going to be toys and plushies made from these penguins, and a part of the royalties will come back on chain. So there's many verticals to explore, as many of the guys have said, and the tech is progressing, and on the legal side as well. Very interesting.
All right, thanks for that, Alexandre. Now, there's a lot of topics that we'd love to go through here, but I do not want to take too much of anyone's time. So, following the title of this panel, which is "How will RWA shape up 2024?" I guess I'd like to hear from each panel speaker. What do you think the trends are taking place, or what's going to happen, including the challenges that we have for RWA space for this year?
Yeah, thanks, G. Well, I just speak from what we're focusing on, because I can't speak for the entire market because it's way too big. Yeah, I think we're going to see a lot more liquidity pools for RWA and IX swap, so there'll be a lot more assets to kind of trade. We're going to bring in some really interesting programs related to utility tokens and real world asset tokens being security tokens. And I think that's something that we've been talking about for a very long time. The future of Web3 startup fundraising is not token only as in ICO, and it's not just 99% of that going to VCs. What's going to happen now is you're going to see, you want to build a stronger community for your company. It's a fallacy that the blockchain industry has sold the degen investors that all the value is in the token, and by the way, you can have one of them at the public sale if you can even get in, and then you can be the exit liquidity for all the influencers. What's going to happen now is you're going to see, because you can issue equity in tokens through RWA, and you can do it as fast and cheap as issuing crypto. You're going to see the smarter startups building much stronger and better communities by offering real equity to the users, and it'll be STO plus ICO, RWA plus ICO. So if you want to get in on the token sale for the crypto, you got to be a real equity and vice versa, and all these super interesting ways that there'll be, plus NFT plus everything. So I think we're going to see a lot more interesting crossovers. I think we're also going to see a lot more lending, borrowing activities available for all these real world assets. Again, if you could take your VC share or your real estate share and take it to a platform and borrow and lend and use that asset versus doing nothing, that's kind of multiple times more interesting. And I think we're going to see new products that we've never seen before. That's the other prediction that I have, which I think is being validated in crypto. If you go back a few years ago, we only had Bitcoin, nothing else. People forget that. And that was also 2008, right? 2008, yeah, right. So Bitcoin, people forget as well, isn't 15 years old, and kind of RWAs is, by the term RWA, 1 year old, but by the term STO, 4 or 5 years old. So we're still pretty young. But we're going to see, we saw Bitcoin and crypto, then stables and DAOs and NFTs and all kinds of crazy stuff, meme coins and stuff. So the securities market, the real world asset, is already by asset class way bigger than that. So we're going to see now all these new forms of debt, new forms of equity, a VC fund 2.0, a real estate 2.0, better ways of investing in real world asset that are all on chain. And there's probably 5 other things that I think, but probably enough.
Jules, that's funny. You're just talking about exit liquidity for influencers. I'm not sure if you looked at who's listening in right now, but there's a handful of influencers listening in. Yeah,
Yeah,
look,
they'll have to work harder in the short term because that game's closing, the door's closing, but they're still going to be there, you know.
No doubt. No, they serve a very, very valuable purpose and role in helping disseminate all the good information that we have in this space and telling everyone what's going on. Look, I think everything you said is spot on there, and it's interesting. You raise a point. I don't want to digress, but in terms of, do I buy equity in a company or do I buy the token that's being issued by that company? And that really comes down to value accrual and the token economics and mechanics and how that all works there. But it's interesting when people dig in and figure out, well, where does the value really flow? Does it flow to the token? Does it flow to the equity? Well, if I want equity, like it, traditional is like a safe and a token warrant, for example. Those safes, getting that equity into a more liquid form and into a security token makes such perfect sense. It's just, it's bound to happen and soon.
If all the value is just in the utility token, why are all the big investors and VCs sitting on the cap table on the equity round? There's clearly value on that side as well. But again, I think they'll all still be there. It's great to have those intelligent people leading rounds, shaping deals, but you'll see a much broader ability for the average people to be part of that. And of course, if you own equity in a project and you also own the currency token, you're less likely to just dump it knowing that, that because you're just less likely to dump it, you're going to hold on. So it's actually kind of a more advanced kind of staking kind of program almost. But anyway,
I think you're giving too many projects credit with that they actually have sophisticated value accrual models going into the equity and the token. Most of them don't have any business model underlying it, so the token's all they got. But anyway, point taken and totally agreed. Look, I'll say one thing before I won't go on a rant like I did before. I think where RWA and where this whole sector is going to really shine is in the lending space in particular. And when the bear market comes, you think about it, like most people, when the bull, like we're kind of in somewhat bullish circumstances right now, but I think it'll be fair to say we haven't got that euphoria that we certainly saw a couple of years ago. That's still to come, hopefully, all things going well. When that's happening, people aren't really going to be interested in 12, 14, 15% yield on their stable coins. They're going to be all in on every shitcoin they can get their hands on, and Bitcoin, Ethereum, whatever they're interested in, frankly. And that's what's going to propel the market up as people are sort of piling the liquidity into that. But when things turn, where do they go? Well, they go into stable coins and they get out of those volatile assets. And then what do they do with those stable coins? Well, they can't put them into stable coins that have a correlated return, like a crypto market correlated return, because there's not going to be any return because the crypto market's going down. So they need a non-correlated return. And where's that going to come from? The real world. Like with what Kasu's doing, we're dealing with invoices and accounting firms. And no matter what happens in crypto, whether there's a bull market or a bear market, frankly, even if there's a recession, people still have to pay accounting bills and tax bills. That's just like there's two certainties in life, death and taxes. If you pay your tax, paying accountants, paying invoices, well, then there's going to be a yield throwing off of there. And I think that's going to be really exciting because a lot of these RWA platforms are potentially going to be bear market resistant. And as people are piling into stables and looking for yield, then it's just going to be eaten up by the liquidity demands within those projects. So that's when I think, even though we're going to have, and I think, again, my crystal ball is pretty dusty, so I don't really know. But, if we do have this, sort of bullish environment in the next sort of 12 to 18 months, and RWA is a strong narrative that's a part of that, we're going to see some healthy runs up. It's actually going to be on the flip side that RWA is really going to shine. And that's what I'm kind of interested to see in how that develops.
Yeah, I'll add to that. I think basically, whether it's on the flip side or not, I think just the RWAs, by having a different kind of non-correlated nature, I think it's just like that's valuable in itself, right? Regardless if you're moving up or moving down. So I think we'll see the volume increase, obviously, and I think from our point of view, I mean, we already have the prospectuses figured out for retail for a large part of the world's markets, excluding US, Canada, and OFAC, of course, but that's what it is. And so for us it's a lot about like just getting mass retail distribution, so that's our main focus, and then obviously staying really close to demand and users to figure out like where they want to see the products develop, in which direction with regards to lending or assets or otherwise. That's our main focus for 24. I think it's the year to scale.
Nice. Yeah, Timo, you just said it. Lending will be a huge piece, and I'm hearing murmurs about even some of the bigger firms trying to get involved on the lending side with permissioned AMMs and similar. Obviously, IX Swap has a great solution here on the DEX side. But also, I think, a lot of investors, even no matter how deep in the weeds crypto they are, they're waiting on blue chip issuers to come to market. So I know it was mentioned before, we can disregard some of the banks in certain cases, building on private chains that are very bespoke, more operationally driven stuff. But really to unlock the RWA stuff, it will take some good blue chip issuers with products that people really want to access. So, I mean, if you have a top-notch PE firm issuing a product on chain that maybe a blend of retail, even if it's just international retail investors could access, again, I think that'll go a very long way in driving the narrative of bringing all of your portfolio management on chain. And that's kind of like, framing investors as to where the future of all their investment management is going to happen.
Yeah, Alexandre, feel free.
Hey guys, Alex from Gains. Well, I actually didn't want to add anything on the challenges because I'm not a builder in real world assets, so I wouldn't speak in place of the real builders. But just wanted to say I'm very happy that with Gains we have invested in Kasu and IX Swap. Love the work of Luke and faculty group, and I know a bit less Timo and Peter, but they've been very interesting. They've had a very interesting takes today, so really cool to see this space evolve. And yeah, if you're looking to invest in promising RWAs projects, you might want to check out Gains. We're a decentralized VC. Just a very quick plug. And I'll have to go because I have a call in 4 minutes. But thank you so much, guys, and I wish you all the best.
Thanks, Alexander. Now that we've kind of more or less talked about RWA's role, the benefits, and the outlook for 2024, I think it's just high time that I plug in one community question from the audience before we head into the closing remarks. I guess the question that I want to ask the panel today, and this is coming from our audience, is earlier this January, Larry Fink said that the next step is a tokenization of everything. After we've tokenized all of the assets that we could think of and everything such as that, what's the next step for RWAs? Where will this space go?
Yeah, well, I think that's where it is going, and we're very far away. The two parallel tracks that we have right now is that we have a world of, again, before RWA, tokenized securities where governments and jurisdictions issue paper funds and companies and people tokenize a share, so it's a digital representation. That world's going to go on for a long time because even companies that want to tokenize there that were set up years ago, they're going to stay in that format. It's the only way you can do it. That's huge. But you're starting to see governments around the world sanction the concept of RWAs, which is purely on chain. Like you can set up in like Switzerland and Delaware and a few other jurisdictions where there is no paper, and that's actually at the government level. So all the governments move towards offering this or allowing this at the actual core level, then obviously from a volume perspective, that's going to grow. And then you have all the public market financial instruments like the treasuries, the money markets, and all of that stuff, which is huge. And that's just one subset. But then people don't really know unless they've done sort of research that the private markets, which is all the stuff the banks have never touched, your startup, my VC fund, etc., is 8 to 10 times bigger than the public markets. So if you think that tokenized treasuries and all these kinds of stuff is big, there's a much bigger market that we're just scratching the surface of. So lots of different areas to go. So yeah, so when do we get to that point? I think the question was, then what? This is going to take 20 years and go on forever. And then I think that's that. We don't have them, or we'll have the cross-chain, I should say, solutions until we don't even know we're using them. And then that's probably the end game.
Thanks for that, Julian.
Yeah, just
ahead,
to add
Peter.
to that, I guess that would really bring us to the fully on-chain digital system where I forget who said it earlier, but eventually it'll just be our tech running in the background. We won't even know it. And ideally, we're sucking up all those efficiencies that blockchain is enabling and that we always share with DLT workflows. It'll take quite some time, but asset class by asset class, we'll get there.
Not a whole lot to add. I think we've kind of covered off most of it. But look, at the end of the day, I mean, the analogy goes, videos move to DVD, DVDs move to streaming, Netflix, all those platforms. That was that evolution, and it just makes the most sense now. You got paper that went to kind of like an e-script. Jules touched on that earlier. And that's moving to tokenization. I mean, that's just the natural evolution. That's where all this is going. I just had to quickly dig up, so I was trying to find, but there was a deck that I actually put together back in 2018 for a security token consultancy. And the quote there, he got the timing way wrong, but I think the sentiment is right. Bob Griefeld, who's a former CEO and chairman of NASDAQ, said around then, so that would have been 2017, 18, he said 100% of stocks and bonds can be tokenized, and in 5 years, 100% of the stocks and bonds on Wall Street will be tokenized. Now, the 5 years might be off, but I think the direction is still right, and it just we're heading to that tokenize everything. It just makes perfect sense, and I think that it's going to be an exciting time when it happens, and certainly not just when it happens, but that transition as we move towards it.
Yeah, I think my view is that the most interesting thing is the dynamic between incumbents and innovators. It's so hard to predict, who's going to win within what space or vertical, and so you have all these anything from a schizophrenic JP Morgan, where they're on the ball on one side and then not on the ball at all on the other side, and then so all this is going to kind of play out where the innovation is going to obviously focus on users and investors and probably just kind of try to build scale as much as possible. And then incumbents, they will, as per usual, be a little bit slow to the game and then come in obviously with massive resource. But then still, I mean, to me, it's kind of the most exciting part of this is just to kind of watch the field and be part of the field of creating those winners. I think that's what I'm excited about going forward.
All right, thanks for that, gentlemen. I think we're now about to reach the 8 p.m. mark. So I guess I'd just like to ask for everyone to just maybe share some closing remarks you want to tell the audience and anyone listening in today. Maybe a few last words before we officially end this panel for tonight.
Oh, my last word is that, there's obviously a lot going on. From a investor or participating kind of mindset, you got to register on the platforms and play around and put some capital to work, even if it's small. Look at the different systems, look at the different products, and start to learn and get heavily involved. Just like in crypto, right? Everyone who got in and got early got pushed around and beaten up predominantly. But they learned, right? And then they captured all that value. So it's just like that, here's the new world of investments. Those that invest early will capture the most value. Some will get their heads chopped off, but generally that's how it kind of works. And it's evolving so quickly that you want to align yourself to some of these platforms, join, educational seminars like that, see the newsletters, put some capital work and see where that's going. And just like in crypto, build your RWA investment thesis, which will take time and fill that out. So, that's my closing remarks. And everyone should definitely check up at IXSwap as well. We've got a lot of exciting things coming out of the pipeline. Thanks, Gene. Good job today.
Nice, Julian. Well said. Yeah, it'll take demand to really get more eyeballs on the RWA side of things. We see a lot of the protocol utility tokens kind of popping off. I think we'll see a lot of these protocols start white labeling their service, if you will, and adding third-party issuers. So, I mean, from our point of view, it just takes demand to kind of soak up all these new issuers. I don't think there's any shortage of firms who want to issue tokens as a new avenue of either capital raising or bringing assets on chain. It's really a matter of finding that product market fit to know that when they do, they'll at least raise a portion of their goal, if you will. So all eyes on where the capital is flowing on chain.
Yeah, 100% agree on that. Just, go to, in our case, swarm.com, just, kick the tires, use the platform, just, tell us what you think. And, once you buy some Tesla on chain, then you'll be able to kind of see what the next natural adjacent use case is for you. And then, I think it's just about getting involved and doing things. And, happy to support if anyone needs help with that as well. Swarm.com.
I'll finish with a plug as well. Thanks for setting the table there, Timo. Yeah, guys, if you're interested in yield and solid, strong risk optimized yield, then check out Kasu. We haven't launched yet. I imagine the platform will be going live around May, mid-May, sort of what we have earmarked for right now. So we've only just come out of stealth just recently and slowly going to be ramping up the comms over the next few months. But lots of exciting stuff coming down the pipeline. And we're looking forward to bringing a pretty significant invoice lending book as the first pool delegate on chain, and then obviously working with a bunch of other opportunities, tax debt, and all sorts of other stuff as well. So lots of good stuff happening. Thanks.
All right, thanks, gentlemen. And that about wraps up our panel discussion for tonight. Firstly, I'd like to thank everyone, as most importantly, our speakers for tonight. So, guys, you heard that here first. Feel free to check out their platforms, their social handles. We have that on our profile. And before we end, anyone tuning in for our quest, the word for tonight is collaboration. I'd like to thank everyone else again, and that formally ends our panel for tonight. Thanks, guys. Have a good one.
Thanks, Gene. Awesome. Thanks, everybody.
Thank
Thanks a
you.
bunch.
Thanks.
Thank you, Jane. Thanks, Jules.